All right. Hello, everyone. Welcome to another episode of the Bitcoin Brief with your host, Tone Vays, and I am joined by the one and only Jimmy Song. Jimmy, how has Texas been treating you? You guys stopped all of the nonsense with the COVID mandates, but I'm sure there's plenty of people standing outside looking at a horse in a mask just by themselves, right?
There are a lot of businesses, especially outside of Austin, say that you need a mask, but no one says anything if you enter without one, which I really enjoy. I went on vacation within Texas, and it was really nice not having to wear a mask or do anything. It actually felt kind of normal. I want normal back. Give me my normal back. That's what I'm saying.
Agreed. All right, guys, let's get right into the stories. We have exactly 1 hour. We have a hard stop at an hour, and I'm sure all of you want me to look at the price, considering what the hell just happened in the last 24 hours. So we are going to go right into screen share. Hopefully, Giacomo will join us. Though if Giacomo joins us, maybe we'll stay on a little bit longer. We will see. All right, so let's kick off the story with a Valkyrie. And the reason for that is because it's a good shout out to the old host of this show, Leah Wald. Hopefully, a lot of our viewers still remember Leah Wald. Leah was not quoted in this article by CoinDesk, but Leah is, I want to say she's a co-founder of Valkyrie. I hope I got that right. I probably should have asked her, but I believe Leah is a co-founder of Valkyrie along with Steven, who is quoted in the article, and they are trying to become the first ETF on the market. Now, one of the advantages that they have versus other ETFs is that they are trying to file through the New York Stock Exchange, and they think they have an advantage by going through New York Stock Exchange versus CBOE. As like the main sponsor of the CT. I don't want to say the word sponsor, it's probably incorrect, but I'm not sure how the technical legality of these definitions actually work. Now, this once again brings up the question, is there a need for a Bitcoin ETF, and what would a Bitcoin ETF do? I guess since I am a little bit more financially inclined, with Jimmy being a little more technologically inclined, and by a little bit more, I mean a lot more, I'm going to tackle this one first, in that the ETF is a double-edged sword, but obviously it's badly needed. We have a de facto ETF being GBTC, which is not really structured like an ETF, but it trades in a similar way to an ETF, but it creates these distortions of the premium when it was historically unreasonably high, and recently it's historically unreasonably low, and of course is going to go to zero. GBTC itself is trying to become an ETF, and we'll see how that goes, because they also understand that they need a more stable price action. Now, the double-edged sword part of the ETF, and obviously there's competition out of Canada, which already has an ETF. The reason why an ETF is obviously good is because retail investors that know nothing about Bitcoin and don't want to protect their private keys are able to, benefit from the price rise of Bitcoin, and Bitcoin is being held by someone that has a better ability to protect that Bitcoin. This, of course, increases the price of Bitcoin and does create more liquidity. However, on the bad side of the equation, that is yet more Bitcoin that's going to get locked up and controlled by regulated institutions. And we already have way too much Bitcoin locked up by regulated institutions. I don't really want to live in a world where 80% of all the Bitcoin in circulation is locked up by government institutions, with our one world government, or the United States, as they like to be the one world government, being able to seize 60, 70% of all Bitcoin by simply making a phone call and a conference call. So that is the double-edged sword. Jimmy, what are your general thoughts on the Bitcoin ETF?
Well, the ETF, at least according to this story, because the New York Stock Exchange filed on behalf of this firm, they have 45 days to either accept or reject it. Obviously, I think acceptance would be very bullish for Bitcoin, but even a rejection, I don't think anyone would really blink an eye. 45 days from when this story came on was, let's see, that was April 23rd. So 45 days would be like May 3rd or something like that. And of course, that's exactly when Bitcoin 2020, June 3rd. So that's of course like right around where Bitcoin 2021 is going to be. So it's possible that we get an acceptance in time for Bitcoin 2021. Massive price pump might be happening. A lot of price pumps happen around conferences anyway. So this could be some serious, rocket fuel.
All right, awesome. Hey, let's welcome Giacomo.
Giacomo!
It must be at least a year.
Yeah, I miss you guys, really. And but we are going to meet soon in Mexico and then in Turkey, right?
Well, we'll see about Turkey based on what the hell is going on there. And it's not even the crypto part of Turkey that's the problem. It's also the COVID part of Turkey. Turkey, I had to get out of there. They were getting so many cases, and I was afraid they were going to lock down the country again. So between the COVID issue and oh man, Jimmy, I think our screens are not aligned. Damn, I wish we could switch. You know what? You know why that happened? Because I got booted out of Zoom, and then I had to come back in Zoom. So you ended up on the left side of the screen, and I ended up on the right side of the screen, and that's how our images aren't aligned when I'm looking at.
Is it aligned? I can't tell. I guess mine's the mirror image, right? So
yeah,
for me,
yeah,
it looks like I'm on the right side.
Unfortunately, it's the mirror image. So maybe if we flip our virtual backgrounds, it would work. But that's because I got, let me see. Yes, no, that won't, yeah, try that.
What, flip the virtual background?
Flip mirror image, yeah. Right. Anyway.
Anyway, I'm not sure how to do it.
It's in video settings, backdrop, and then there is a check mark for mirror image. All right, anyway. Giacomo, thanks for joining. Hey, quick thoughts on a Bitcoin ETF. Do you think that it's good for the market? Do you think it's good for the crypto space, bad for the crypto space? We have Jimmy has a hard stop at the top of the hour, so we're gonna try to, and we have a bunch of stories to cover. So go.
So basically, I think it's a net good. It's an overall good. Basically, the real problem is people that would think that they are using some kind of censorship-resistant asset, and they are not, like keeping Bitcoin on an exchange or something like that. If you're using ETF, it's clear that you're just a speculator on the price, which is fine. Speculating on price is fine. You call your fiat bank and you get a Bitcoin ETF, you get Bitcoin flavored risk, and that's what you get. If you want to use Bitcoin for censorship resistant, then you run a node, you manage keys, you care for fungibility, you coin join, you check for address reuse. So you do that stuff. The middle ground, I think, is very, very dangerous because it makes people think that they are using something that they don't get, like censorship resistant. And personally, if I have to choose between some kind of legacy fiat bank and scammy companies like Coinbase, I would rather wish all the best to legacy fiat companies instead. So I think it's a good. The only problem that I see is the way they will manage collateral. They will have to manage lots of collateral, and that's a huge centralization if they try to do everything with some. I mean, if you have like a giant ETF using a small Bitcoin startup anyway, like Sabo or something like that for custodianship, I think that could be a huge systemic risk. So I hope that they will try to at least diversificate a little bit the custody part.
All right, now similar views as myself. All right, let's move on to our next story. And our next story has to do with our good old friends and my former boss at JPMorgan, Mr. Jamie Dimon, who was demonizing Bitcoin in forever back to the early days of this show. And they have finally launched a way for their high net worth clients to invest in Bitcoin. This is more of, I mean, we don't really have much to cover on this, but how things have turned, huh?
Yeah, I don't understand why they have to actively manage a Bitcoin fund. I guess it's going to be traded constantly or something. I don't understand the active management part of this.
Good question. I don't know. I guess the active management is the protection of the keys, maybe. I don't know. But we have to like question if these institutions know what they're doing, because our next story, and Giacomo, feel free to comment on both of them at the same time, because I'm going to give you the floor. Venmo has added Bitcoin, but they didn't just add Bitcoin. And for some reason, Doge is on the cover here. They added Bitcoin, Ethereum, Litecoin, and even Bcash to be used inside a Venmo app. I gotta say, I've never used the Venmo app in my life. I'm still not sure why the Venmo app exists, because it's owned by PayPal and PayPal has their own solution. Why can't they actually integrate the two into a single app? But hey, I don't run either of these companies. And obviously, they're allowing people to pay with Bitcoin and other crypto. They're also selling them to you exactly what PayPal does. But I guess they're employing different engineers. Your thoughts on the Venmo situation?
Well, I think that commenting Venmo is also partially connected with Jimmy's objection about JPMorgan. So his objection was why they should manage stuff. I mean, it's simple enough. You just buy Bitcoin and reflect Bitcoin price. But the problem is that when buying Bitcoin and holding Bitcoin, except for the technical part, so the security and the privacy part, it's fairly simple. There is nothing much to market. It's not that a crypto fund, which just buys and orders Bitcoin, has a very strong narrative of active management. So they have to put some kind of narrative around that. And the same goes for a payment system like Venmo. Okay, I let you transact Bitcoin, but any kind of open source Bitcoin wallet lets you transact Bitcoin. That's not really relevant. So the relevant part is Venmo is selling you Bitcoin, but is doing that through PayPal. So they are doing nothing of added value. So the incentive, but the same thing goes for exchanges. The incentive to push shitcoins is usually from crypto funds and payment system is connected to the fact that they have to add some kind of perception on added value, because otherwise what you're doing, Venmo, is just granting some kind of matching of demand and offer, which is okay, it's great, but it's what every other marketplace can do just as well. So they have to follow some kind of pseudo technical narrative around shitcoins, basically. This is also getting another point to, so far at least, to Cash App, which is a similar situation, an exchange and a payment system, which so far is still far from shitcoin narrative, which is I mean, at this point is a market proposition which has a value, and I hope they will stay on this market proposition.
All right, Jimmy, your thoughts?
Yeah, so I mean, Venmo is obviously competing against Cash App, and if you know both apps, they operate very similarly. They have like tags for usernames for each person. They have like QR codes that you can scan so you can pay them and things like that. And Cash App obviously got into Bitcoin, and the reason why they're offering other coins is so that they have some differentiation against Cash App, and that's really the only thing. As far as I know, they're not allowing you to withdraw. So this is really just a third-party custody way of getting exposure to whichever asset that you want. At least for Cash App, Bitcoin has been a huge boon, because this is how they've monetized this free transfer of money back and forth. Venmo seems to be going that same route. I don't think it's going to be as popular as Cash App, because they seem to be scattered all over the place. And I don't know, maybe it becomes something like an altcoin casino or something like that. But yeah, that seems to me the play here. They're trying to emulate Cash App's success.
All right. Oh, guys, just a heads up, like Jimmy, you're coming in really loud and Giacomo's coming in really soft. So maybe Giacomo can get a little closer to the mic, or get the mic closer to you. That would be great.
Sure.
All right.
Okay. Okay, next story then. Let's move on to what's going on in Turkey. So one of the exchanges in Turkey that supposedly has almost $600 million dollars worth of crypto, mostly Bitcoin, I'm sure, but other shitcoins as well. So the CEO managed to disappear, and I mean, best guesses, he's somewhere in Albania. And right after that happened, the Turkish government put out arrest warrants for like 70 something people, 78 people, 62 of whom were arrested. So basically, if you are working for a crypto exchange, you may really want to pay attention as to how honest and legitimate that exchange is, because the Turkish government just started to go and arrest everyone that was working at that exchange. And then they even blocked financial transactions of their competitor exchanges that are in Turkey. Now, as you guys know, Turkey recently made an announcement that Bitcoin and other cryptocurrencies are not allowed to be used as money. So you're not allowed to use them for payments, but they didn't say anything about trading them or investing in them. They just put a ban on basically stores or merchants accepting Bitcoin as, or cryptocurrency in general, as payment, because they're trying to prop up their own currency, the lira, which is completely crashing. I spent over 2 weeks in Turkey this month, and I have to say, everyone there knows Bitcoin. Like the average, not the average, but if you meet someone like our age or younger, like anyone between the age of like 20 and probably 45, is well aware of Bitcoin and is probably trading it. There is a greater than 50% chance of that. So they're very, very well versed. And this just goes into the whole concept of, you really got to be careful of how much Bitcoin you're holding on these exchanges. This is always a huge risk. When people ask me how come I don't trade, this is like one of the biggest reasons. Your Bitcoin is too valuable. If you're going to trade it on an exchange, don't even consider putting more than 10% of your Bitcoin onto any exchange. I don't care if it's Coinbase or Kraken or Gemini. I would never let an exchange hold more than 10% of my Bitcoin. Even that's probably too much. Let's go over to Jimmy and get his thoughts on this first.
Yeah, this is kind of what happens when you leave your coins on an exchange, is that the CEO might run off with it. You know, this has happened with Quadriga and many others. And this is always a risk that you have. They may say that they have very good internal controls or whatever, but it's not easily verifiable. And that's kind of the problem here. And, you know, Turkey is experiencing a lot of inflation right now. So it's not surprising that, you know, something like Bitcoin is desirable to a lot of people there. And it's an unfortunate situation. Not your keys, not your coins.
Giacomo?
Yeah, of course. The main lesson is about custody of keys, and that's the point. The owner can run away, or the owner can be arrested and confiscated in other cases. This case is an hybrid, because probably all the blocks on bank accounts are due to the fact that he escaped, but it may be that he escaped also as an action triggered by the change in law in the country. So it's all a double feedback loop that can influence each other. But generally speaking, you should keep your keys for yourself and not trust third parties. There is another lesson, I think, in the situation in Turkey right now. I don't believe a lot in the situation of honeymoon with governments, at least not as a stable outcome in the long term, as a long-term equilibrium. The point is, fiat money eventually always ends with hyperinflation crises. That's basically the point of fiat money. Eventually, you have to print more and more and more and print even more. And when there is hyperinflation, people will try to run away from that. And so you will try to stop them with censorship and monopoly on money. And then they will find censorship-resistant options to still escape, avoiding routing around censorship and routing around confiscation. So Bitcoin is a natural enemy of any central bank and nation state. By definition, if a nation state wanted to become best friend of Bitcoin, they would have to accept to roll back their military and welfare expenses to 1914 levels, because anything beyond that needs not just direct taxation like property taxes or income taxes. In order to spend what they spend in warfare and welfare, they have to use inflation tax. And if people has a way to escape inflation tax, which Bitcoin is, they don't pay the inflation tax, or not so much. And so the government eventually will have to turn against Bitcoin. Now there is one force which pushes the government against Bitcoin, which is this: the Bitcoin will shrink down the spending if adopted by necessity. There may be some kind of competing forces, like governments. They don't like if citizens use Bitcoin because they avoid inflation tax, but they do like to use Bitcoin against external like measures, like embargoes or financial blocks or something like that. So Turkish government may hate Bitcoin used by Turkish people, but they may love Bitcoin used by Turkish government against the US government or some other government. So this kind of competition could actually create some kind of equilibrium. Another kind of objection or counterpoint or exception could be the fact that not always politicians understand long-term threats, because politicians are just focused on short-term. So if they can just let Bitcoin be and make some money without facing any kind of crisis now, they will postpone restriction, they will postpone confiscation a lot, because they don't care for the institution, they care for themselves, of course. And the last situation may be that if a politician knows that, or a bureaucrat or a judge, if they know that banning Bitcoin will fail, because they really understand. I mean, if they don't understand Bitcoin enough, they are not scared of Bitcoin. If they understand Bitcoin very, very well, then they may know that trying a ban will ultimately be pointless. So they will try just to mitigate the situation with regulation and KYC and stuff. So it's like the midwit problem in the IQ distribution. The very stupid governments, they will probably not ban Bitcoin because they don't understand it. Very smart government employees will not ban Bitcoin because they understand it's pointless. But everything in between, which is the majority, will eventually try to restrict, confiscate, ban. And I think this in Turkey is still nothing, because until we see something close to Roosevelt executive order of actually confiscating financial assets in the private possession of American citizens, until we get to that level, this is all basically vanilla stuff. So eventually, I think it will happen. This will change nothing for people running their nodes and holding their keys, except they will have to manage some kind of plausible deniability story, I guess.
So how do you see a future where like a relevant central bank is forced to make an announcement they've started doing Bitcoin purchases?
I think that entirely possible, especially if it's not the Fed, because the Federal Reserve has the Federal Reserve is the fiat system globally. So it has anything to lose and basically nothing to gain from any change in status quo. But other central banks, they may be actually absolutely incentivized to hold Bitcoin as reserve asset. And eventually also the Fed, but as a sort of capitulation, a final capitulation. The point is that what we have to remember is that the government is never really bound to follow, by definition of modern nation state, they are not bound to follow the same kind of rules they impose. For example, you may have Nancy Pelosi, they will shut down beauty salon, but they will go anyway. You will have the French guy, French minister, they will shut down restaurants, but they will go to a restaurant. And this is the same time for finance. When Roosevelt confiscated gold from American citizens, the Federal Reserve did have gold possession, and they kept having gold possession. So the fact that the central bank will need Bitcoin, and they will in many parts of the world, don't mean that the Federal Reserve will not, or the other central banks will not try to prevent the little guy from doing the same. The main point of nation states is that the animal farm, all the animals are equal, but some animals are more equal than others. And those are the pigs, and they are in control, and what they impose to you don't apply to them.
Yeah, no, that's totally true. Jimmy, your thoughts on the potential future of a central bank picking up Bitcoin or anything else Giacomo just said?
Yeah, there's a lot that Giacomo just covered, but yeah, there's it is very possible that central banks will be picking up Bitcoin. Confiscation, I don't think will happen quite like Executive Order 6102 that Roosevelt did. Just because all of the, you can take them from exchanges like the one in Turkey or whatever, but it's going to be fairly much more difficult to get it from actual individuals. And this is why the gold confiscation back in 1933 was so effective, because most Americans actually held their gold at the banks. And so,
Jay, but this is my concern with all these ETFs and Fidelity and JPMorgan and Coinbase and the Geminis of the world. Like 70% of all the Bitcoin could end up in the hands of U.S. regulated institutions.
And those that do will get wrecked because then they can't hold it. The thing is, for Americans that actually held their gold at home, they actually got to keep it, and they had to be very secretive about it because you weren't allowed to have more than 1 ounce of gold. But for everybody else that held their gold at the bank, it was very easy for the government to come and take because it was just at the bank. So a similar dynamic could happen here, and knowing that this is a possibility is enough, I think, to get people to not put their money in these exchanges or whatever.
All right, let's move on. Yeah, go ahead, Jack. Go ahead, G.
It seems completely at odds with what we said before about ETF, but it's not, because what I say is, if you're, you as investor are a person with some kind of thesis about the future, some kind of prediction, some kind of scenarios and probability distributions, and if you think that Bitcoin can make you money for some kind of dynamic, but if you rule out as possible this kind of confiscation attempt scenario, then it's reasonable for you to just use ETF and stuff like that. Because in your trade model, in your prediction model, there is not, you are not hedging against a confiscation risk, but just against inflation. So if you think that the government will just graciously let you avoid inflation, just buy an ETF and just avoid all the rest. But if you do have in your trade model an explicit consideration of confiscation scenarios, then or even just ban scenarios for little guys, then run your node and store your keys independently.
All right, so we got a few more. I wasn't sure if we would get to these stories, but it looks like we are. Jimmy, you sent this over to me. It was interesting. I skimmed through most of it, but the major points are we have all these companies offering 8% interest on their dollar deposits with these Bitcoin loans. You can even get 5% on your Bitcoin, which sounds insane. We'll see how that works out for them. And this write-up, comes up, shows you all these reasons, who's borrowing it, trading. I doubt many people are effectively doing arbitrage. They do mention, GBTC premium, which has been completely eroded. This was actually written a little while back. The GBTC premium was already getting eroded, but not to this point. And would either of you guys give your Bitcoin to any of these companies for a whopping 8% interest? Let's have Jimmy go first on this one.
Well, 8% is only on the dollars. On Bitcoin, it's really 5%. So I don't think I need the 5%. Honestly, I think 200% annually has been pretty good over the last 10 years. I don't need that extra 5%. That might be just me.
Giacomo?
Yeah, I understand if somebody decide to take a calculated risk into this kind of stuff. I'm not sure how it can be possibly sustainable in the long term. But when you have an asset which this kind of dramatic price dynamics as Bitcoin, I can understand that somebody may want to give up volatility and somebody may want to incamerate more volatility. So the basic understanding, the very high level understanding I have of this stuff is we have an asset that does like this, more up than down, but then somebody wants to basically have this kind of crypto dollars, or it's the same with the DeFi bullshit. Basically, somebody wants to give up volatility, somebody wants to get more, and so this may make some kind of sense. The problem is that either that the business will honestly declare that, like in the case of BlockFi, or the business will pretend that's not the case, like in most DeFi scenarios. It will be all trust-based and basically centralized. So you have a strong counterparty risk. And I think if you want to take the calculated risk to give out your Bitcoin for a return with the counterparty risk, probably giving it out to some counterparty that acknowledges the counterparty risk is better than not. So I would rather use a CFI than DeFi if I really had to. But I don't have to, because first, I don't have Bitcoin. I'm poor, and second, if I had Bitcoin, I would probably be satisfied with the Bitcoin price dynamic, as Jimmy said, without any reason to risk more, to increase counterparty risk, just to increase 5% over the already incredible price dynamic of Bitcoin.
All right, and our final story is not really a story, but an update on Taproot. Jimmy, give us, I have this article in the video description. It gives you a little bit more detail on it. We're just going to go straight to Jimmy to give us an update. Maybe, actually, we have 1,000 people watching right now. Maybe a quick overview of what Taproot does, and then Giacomo can, explain it as well. You guys are both slightly more technologically inclined than me. So Jimmy, go for it.
Well, so first of all, there's been a lot of drama around Taproot with among the developers, the speedy trial stuff, the pull request in the BIPs repository. Luke is embroiled in a lot of stuff because he really wants an LOT equals true client out there. And, github.com, I think Bitcoin activation is the repository for lock-in on timeout equals true being sort of like the client that's there. But, this article is much more about Taproot itself and all of the ways in which it's actually very useful. This is a question that I get a lot on Clubhouse, for example. And what this is laying out are, okay, here's what's actually in Taproot. Schnorr signatures. What do you get with Schnorr signatures? You get signature aggregation. You get smaller signatures, less block space being used, and so on. What's Taproot? Well, Taproot is a way to essentially make masked work. And what does that mean? It means that you get better privacy. You get different conditions encoded into the mask tree and so on. And it goes through a lot of this stuff in decent detail and in a way that hopefully that most people can understand it. That's why I like this article. I love what River is doing. They're Bitcoin only, and they're putting out resources like this so that people can understand what's going on.
Yeah, a very basically, if somebody is still confused about what Taproot does under the hood, and just wants to try to imagine a very, very stripped down final application, you have to basically imagine that you can have very, very big multi-sigs. Right now, you can have easily in Bitcoin a multi-sig which is 3 of 5, 2 of 3, maybe even 5 of 7. But when you do that, when you spend that kind of multi-sig, you will spend a lot of more fees, basically, because if you have, let's assume you have a 3 of 5, every time you spend that address, that's P2SH address, the one started with 3, you will have to write down 5 public keys and 3 signatures, which are very, very, very big. While with Taproot, you will just write down 1 signature and 1 public key. The same goes if you do, well, you need threshold, of course, but there is a little more technical complication. But as a final user, when the tools will be ready, you will just write down one signature, one key. The same goes with 15 signature, or even in theory, 20, 40 signatures, of course, with a lot of technical problems coming around. But you can have huge multi-sigs and complex multi-sigs without spending fees, without spending a lot of fees on chain when you settle down. And the same will also help probably Lightning channels to be a little bit cheaper to open and close, well, just to close actually, but especially it will increase eventually at equilibrium, it will increase privacy, because every kind of cold storage multi-sig closing will just look the same as a normal one-to-one spending, and every Lightning Network closing will just look like a normal one signature spending. So when people will adopt the right tools, there will be, I mean, we don't have to create too much expectation like with, well, like we did a little bit with Lightning. Maybe people was expecting everything to just work magically since day one. There will be time to develop the tools to use this signature aggregation properly, but then you can basically save fees and save privacy in a very interesting way. And it's generally a very elegant algorithm. Of course, the other very cool thing is that the signature aggregation may be the first step for another soft fork in the future that will touch the COACH structure, so you can have more, even cooler stuff like cross input aggregation that will make coin join super economically convenient. But that's not in this Taproot activation. As Jimmy said, there is some drama about, I mean, there is no drama about the proposal itself. I think the drama is all around the activation, and not even exactly about the activation, but about the procedures and the principles that are being used for the activation. So, for example, Luke Dashir, as Jimmy said, is pretty triggered because there seemed to be a route consensus about not asking miners, but just giving miners time to basically to get it early, to signal readiness early, but not to give miners any chance to stop it. And now we went back to a situation where miners may stop it for now, and then you have actively do something in order to activate anyway. So all this discussion was not really about Taproot. Everybody kind of likes Taproot, and everybody also being conservative about activation. But there is a lot of discussion. This triggered a lot of discussion about governance or lack of governance procedures. And in this case today, we have the one guy proposing for the first time in the history of Bitcoin to bypass the original BIP repository on GitHub to open a new BIP repository in order to basically fire Luke Dashir from the BIP governance. Just for people who doesn't know, BIP was an idea a lot of time ago by Amir Taki. The idea was, okay, every developer can just do whatever they want on Bitcoin. You don't have to ask for permission. But in order to know what everybody else is doing and to keep everything more interoperable and standard, why we don't have a repository where everybody having an idea about Bitcoin that may be a standard will just write it there. Amir will assign a number to this. So when we discuss, we know the number we're discussing about. So it's not a governance mechanism. It's just a serialization mechanism for standard proposals. And Luke was recently, after Amir and then Gregory Maxwell and then Luke, he's in charge now. And basically the discussion about the activation of Taproot is basically entangling itself with the discussion about the management of the BIB process. So people are fighting, but I think that's good, because I mean, the point of Bitcoin is that there should not be any easy governance. There should not be any easy decision process. If you change Bitcoin, that should be hard and difficult, even for very, very useful things, so that when people will propose useless or dangerous things, the friction in the process will easily stop any kind of bad change. So I'm pretty happy. I'm sorry personally for people who are getting triggered or angry at each other, but from the systemic point of view, this is good for Bitcoin.
Look, Luke Dash has been critically important to Bitcoin's development over the last, what, 10 years now? So kicking him out of the repository is probably not the smartest thing to do. You may disagree with him, but his opinions aren't that crazy, even though they may sound like it sometimes.
Well, I mean, Maxwell's on the other side of this argument, so it's there's some clashing here, and
Jimmy, but wait. But Maxwell was on the other side of our argument for the user-activated soft fork in 2017 as well.
That's exactly right, and they haven't really changed. The thing is, like, there's a lot of interesting arguments made here, and I think I kind of agree with AJ, who wrote about the user-activated soft fork in 2017. He thinks we won too easily, and it's made us all think that like we'll win just as easily every other time this happens, and I think he's right. I don't think it's going to be that easy the next time around, and if we think so.
I don't think we won that easily, Giacomo.
Oh, we definitely won way easily. Yeah.
I think there were two battles going along. We were mostly mostly basically on board for both, so we didn't see the difference. But one battle was not to X, and one other battle was UASF. So one battle not to X, I think we won easily, and the next time more easily than we expected. And I think the next time we will have to fight something like that, we will have to fight, but I think we will win even more because Bitcoin is getting more and more stable and more lindy and more difficult to change. So the reaction against a change that we don't want, I think we are getting stronger about that. And we will still have to get mad and troll on Twitter and discuss and explain. But I think it will be easy to keep out changes that we don't want. But the other fight that we fought at the same time was UASF, which was a change that we did want, and we did not want some other party to block it. And I think I agree with Jimmy about this. This is very tricky because on one side, maybe we won. It was not that easy, but maybe we can lose the same kind of battle in the future. And it's also good that we can lose that kind of battle, because if good changes are guaranteed to pass, then bad changes as well are also guaranteed to pass. So I think that the really scary and the very scary situation would be a situation where bad changes are allowed to be to basically take over the network. If we are protected against this, the fact that good changes may be slow and difficult to push is not that bad. We still have to push for stuff that is good. So we have to, but so UASF was necessary because the lack of SegWit was used as a weapon to promote the 2x hard fork. So there was a very complex game theory in which if we don't manage to get this change, then there will be this narrative of urgency that will push people to push for another change, which may be dangerous for the system. In this case, if we don't get Taproot, I will be sorry because I love Taproot. Taproot is great, but I mean, we just wait. So I think the main point, I think Luke, for example, I cannot speak for him, but I think he's scared that we don't get Taproot. He's scared that we give to miners a very strong political weapon again. So it's more about precedences than about content. About content, everybody likes Taproot, and everybody likes to wait for Taproot if it's necessary.
All right. Any final thoughts on this, Jimmy? People in the live chat actually remembered the old axe and machete picture. I almost forgot about that.
Yeah.
That made it into Forbes.
Yeah, it's a lot of drama. I think we'll see it November 15th, and that'll be it. Like all this drama will be over. I don't know. Maybe Callie does become like the BIP repository maintainer instead of Luke. I like Callie a lot. I like Luke a lot. So no worries if it's either of them. But yeah, Matt Corrala is talking about like just getting rid of the BIP system altogether and all that. So we'll see.
All right. Yeah, I gotta get more in the loop on all that. Go ahead, G.
Sorry, Tom. Maybe we will just end up with 2 repositories for BIPs, and somebody will just curate an integrated list of proposals. So it's not really about governance. It's more like about information passing. So there is no one in control of Bitcoin still. So we can do without BIPs, or with two BIP system, or with one, with two, with three, or with none. So ultimately, Bitcoin wins.
Yep. Oh, that's definitely true. Bitcoin pretty much will always win. Hey, I think we're going to skip the story. Maybe we'll talk about it next time. Pete Rizzo wrote a pretty extensive article on the last days of Satoshi Nakamoto. I mean, I wasn't around the Bitcoin space back then, but I clearly remember Gavin Andreessen's little trip to the CIA did not sit very well with Satoshi. That's how I remember it. I do want to get to the price. So unless, I don't think Giacomo, I don't know if you read this. This just came out 2 hours ago. Jimmy, any like quick thoughts on this?
I haven't read it yet, but I mean, Pete's been doing really good work ever since he left CoinDesk. So I am curious to really dig in when I get a chance to really read it.
Same.
All right. Before we get to the price, let's quickly look at the mempool. We were clearing some nice transactions over the weekend. I was actually surprised. We got down. This is a 3-month look. We got down to like 15 sat per byte transactions this weekend. I was very, very surprised. It's starting to pick back up again, but I think the hash rate is back, and I think we're going to be okay. But the mempool still hasn't cleared this year, and some transactions I know have bounced back. I'm now also on my podcast showing Felix's page. What the fee, I think it's fairly accurately made. Those are generally my estimates. So right now, if you want your transaction, have a 50% chance of getting through in the next 4 hours, you want to go in with like a 35, 40 sat per byte fee. Jimmy, your view?
Yeah, so it's clog. What can we say? There's a significant fee for miners right now, and that's motivating a lot of them. I think I saw a block with like 2 Bitcoins as the fee. The block reward is only like 6.25, so it ends up being actually like a significant portion of their revenue. This is how it's supposed to work. It's a market. I am waiting for some transactions to clear, and you can see that the next 3 blocks you need at least 175 sats per byte, which is on the expensive side. This is why you do transactions over the weekend or use Lightning or something like that, and those are all very convenient ways to not have to suffer from this kind of stuff. You can also see that a lot of these blocks are getting closer to like 1.5, 2 megabytes. I'm really hoping that once blockchain.info implements SegWit, which they claim they will do by the end of this month, the 30%.
No, are you serious? I'm going to take the under on that.
Well, I mean, that's what Peter Smith said on Twitter. So I don't know.
They are
supposedly
was effectively incompetent.
Well, so apparently, so Jameson Lopp has done some research on this, and whenever blockchain.info goes down, like all the pay to pub key hash transactions disappear. So if they actually transition to SegWit, then there will be more block space, and yeah, it'll be a lot better going forward. And it should maybe clear some of this. I would say that they're probably the reason why things are so clogged right now, but we'll see.
Yeah, so I like to go on record every time that company is mentioned that they are hands down the worst wallet that is a legitimate company and is not going to steal your money. Like of all the wallets that will not steal your money, maybe I mean, they are not custodial, so let's remove custodial ones. Like I'd rather have people use them than Coinbase. But anytime I see someone using a Coinbase wallet or a blockchain.com wallet, I always beg them not to.
Yeah, I mean, we all don't like that wallet, but what can you do?
Same. The funny thing is that many years ago, that was like in 2013 when I started helping my friend setting up a wallet. That was a great wallet because it was before hierarchical deterministic BIP32. it was very difficult to back up seeds. And so having a seed which was encrypted client side and that stored on the server encrypted, it was dangerous, but for the time, probably a very good compromise between security and usability, because there was no alternative. After BIP32, that security model became super bad in comparison. And then they basically the Roger Ver share destroyed the reputation of the company because they participated in attacks against Bitcoin. They didn't implement a SegWit. They started to. The point is that when you become an anti-Bitcoin company, even reputable developers will not want to work with you, and so we will end up with worse in general technical skills. And so your incentives will not align with incentives of good Bitcoin development, and so you will end up obsolete very well. And blockchain.info is definitely a very obsolete wallet right now.
All right, so to counter a little bit of that, you just praised them for their 2013, 2014 private key storage. I will add to that, they also did something stupid, like email you your private key. And a lot of people got burned on that when their email accounts got hacked, and people just did a Control F search on blockchain.info's back up your private key unencrypted right into your own email. So that wasn't a very smart business decision. Oh, Giacomo, we don't hear you.
You are completely right.
All right. So now we can take a look at the price. Jimmy, you still got 10 minutes for us. So we're gonna take a 10.
Well, I want to see that, your indicator predicted the bottom on the daily, like pretty accurately. Did. That was pretty impressive.
Yeah, no, that was accurate, but I did do a show last night, and I did say that while the indicator predicted this bottom absolutely perfectly, the way this candle played out was definitely not good, because early in the day we started to go up and we crashed like in the last few hours of that candle, and these were the last 2 hours of that candle. So just the way that candle played out, I think in yesterday's video I referred to hold through this, you needed the cojones of steel, because you literally made the new swing low while doing it. But when we look back on this day in a few weeks, it is very, very possible that this would have marked a huge turn in the market. Now, I've also been saying over the last few days that I am expecting this rebound into these moving averages, which are going to cross over. Now, it's possible that this crossover could be avoided if the price of Bitcoin rallies to $60,000 early this week. And that is actually possible. While there isn't that much volume that seems to be associated with this crazy move, I do trust this move. This is the second biggest daily gain in nominal terms we've ever had. The only day that we've had that was bigger than this day is right here on the Elon Musk news. That's the only one. So I do think that this is something to build off of. I am expecting us to go into these moving averages at 57,000. And after that, we will be reevaluating. For now, I still see this as a 1 to 4 candle correction off the drop. And then we will need to reevaluate. So let's see how that goes. The weekly chart is consolidating between these two moving averages. And if we continue to consolidate into 50,000 into mid-May, that could set a little bit of trouble, even though from that point we can certainly go up or down. It is yet to be clear. The weekly chart to me right now still leaning bearish. So I wouldn't rush in to a Bitcoin trade on a long-term level using the weekly charts. For that, I would need to close above the moving average and something in the vicinity of high 50s. Need to be back in the triangle above all the moving averages. Preferably a green star would show up. The next green star shows up, I'm going to be very bullish for a huge breakout. It's even possible we can go above 80 over the next few months before a bigger correction. but on a daily scale, I am bullish over the next few days. This is the 1 hour scale. And the 1 hour scale is consolidated. It looks like we pulled back a little bit this hour while we were doing the show, but we're now going back up. I'm going to glance at the 4 hour look. The 4 hour look should also still be bullish, just a little bit of a consolidation. But last night, we also took a look at the 30-minute chart, as the 30-minute chart was doing really well with the MRI timing. You can see how the MRI timed this top right here. It was one candle off right there. This is a nice little consolidation. I was doing a video during this candle, and that's a nice consolidation for 1 to 4 candles more upside. This 30-minute reversed it for 1 to 4 candles, and then back to the upside again, textbook. And once again, here's the 30-minute chart where the MRI top called the top of the swing. We've now gone a little bit further than a 1 to 4 candle correction, but this is another promising 30-minute candle and wants the price of Bitcoin. To me, if we can close on the 30-minute chart, on a 30-minute chart, I'll be a little more conservative. I'm going to say above these shadows. If we can close above where this line is, which is 53,000, let's say $750. If we can close above that on a 30-minute chart, I would be bullish into higher prices the rest of the day and into tomorrow. GBTC popped a little bit. I will be getting back into GBTC because my exit was slightly higher than that, so it doesn't cost me any money. If you held through it, then that's okay. And I don't know, I'm not going to talk about shitcoins today. I have been looking at some of their prices. I am still bullish on gold, but the MRI top is coming in consolidation. So I'll talk more about that probably tomorrow. Stock market is at a new all-time high. So of course I am bullish on the stock market as well. All right, that was a look at the price of Bitcoin. And now we're gonna pull up programming Bitcoin as we say goodbye to Jimmy and Giacomo.
Goodbye to everybody.
Oh wait, Giacomo,
right.
you might have some stuff you want to plug, but we'll let Jimmy go first.
All right, so you got my book, Programming Bitcoin, if you want to learn the Bitcoin protocol using Python and are comfortable programming, then this is the book for you. I got 2 other books, the Little Bitcoin book and Thank God for Bitcoin. The first one is a little bit more for people that don't know anything about Bitcoin and just want to learn. The other one is a moral argument for Bitcoin, which you can learn about. It comes from a Christian perspective, so please keep that in mind for those of you that are trying to orange pill, your relatives that might be more Christian and so on. Go to locations. Yeah, I am running my programming blockchain seminar in Miami and Mexico over the next few months. I don't know why this never. Okay, yeah, there we go.
No, it works now. It works now.
Okay, all right. So yeah, the Miami one is happening right before the Bitcoin 2021 conference, and the Mexico one is happening right before the Bitcoin Standard Conference by Ugly Old Goat. Yeah, those are the next 2 cohorts that I am going to host, and you can learn in 2 days how to program the Bitcoin protocol, and you will have a lot of exercises. It's full 8 hours each day, and this is my way of trying to create a deeper bench for the Bitcoin ecosystem. There's a lot of programmers, but I think through doing these seminars, I've managed to get more programmers into the fold. So I got to start that again because we need more programmers and more security over our network.
All right, thank you for that, Jimmy. Giacomo, oh, hey, we may have to save it for next show, but during our show, people were asking you to comment on your Twitter beef with Talib. I know Saifuddin has his beef with Talib. Maybe we can do a whole show about that in the near future.
Yeah, I basically Taleb is now protected his account, so he like you can't see it unless you're already following him or something, and he hasn't blocked you or something like that. He's a fragile person, and he's
The
sold
guy
his
who wrote the
Bitcoin.
anti-fragility book, right?
Yeah, this is the thing. He doesn't practice what he preaches. So yeah, yeah, apparently Bitcoin Twitter managed to put him into hiding, which is kind of impressive because he's been a bully for so long on Twitter, and the bully is getting bullied. Justice.
Oh, so yeah, I just went through his account and I was not following him, and therefore I cannot see his account. But this is the first thing that jumped to my attention is his virtue signaling of his Uber rating. What the hell is
Yeah.
that?
Well, the thing is, like, he was very pro lockdown and stuff, so a lot of his fans just were like, "What the heck is going on?" And that's the thing. He's being proven wrong every day. So what can you do? The guy's not a very good trader, from what I could tell. He makes some money every once in a while, and he publishes that he made a lot of money in the months when you have a sudden drop like we did last March, but then he doesn't publish anything else. He's kind of a fraud. So, good riddance, I say.
Giacomo, your thoughts, real quick?
Well, about Taleb, I completely agree with Jimmy. Is basically he doesn't follow what he preaches, and he's a very good writer, a very funny writer, and insightful in some ways. But then he decided to go all about his ego, and basically he decided to apply his black swan theory about the Chinese virus. And when he did that, he decided to escalate that, supporting a global lockdown, which was the most fragile of the possible policies, the most incredibly centralized and fragile policies. And when people started to point out the contradiction, he basically decided to escalate into pure ego fight and to become anti-Bitcoiner because of that. And yeah, everything for him is more about ego first and truth second. So it's not surprising. Uh, it's a pity because books were fine. I guess the next books will not be as fine as the previous ones, but I have the collection, so I will keep reading the old ones, no problem. And as for my announcement, everything I have to counteract Jimmy's seminars and two books was just one website with my courses and free materials and consulting calendar, but it's broken now, so I don't have even that because I did something with BTC Pay server that broke Let's Encrypt or NGINX. So right now it's not even working. So everything I can tell you until I fix this freaking website is that I will not be in Miami because it's way too complex. I will be in Mexico with Jimmy and I guess you, Tone, and I will probably have a node seminar just like the one we did in Las Vegas, but maybe a little bit simpler there. And then the next seminar will probably be if and when we will do something together, Tone, in let's see where and when. Before that, I may have a seminar in Dubai on 24, 20, 25 because I will be in Dubai from.
Oh, I'll be there. I'll be there, Giacomo.
Oh, great! So let's meet there. I was thinking about organizing something there last minute.
Cool. Yeah, we should do a dinner. We'll definitely do a carnivory dinner in Dubai. That'd be great. But it's gonna cost you guys a lot because Dubai is unreasonably expensive. Especially if we do something like Nusret, which is like their only good steakhouse, which is grossly overpriced. But you're looking at it'll be at least $500 per person to attend that one because your steak's gonna be $400. Insane. All right, guys. We gotta say goodbye. I remember when this picture was taken. Shout out to the lovely Daisy for taking that picture in Las Vegas.
It was great.
All right, guys.
I gotta go, guys. Fiat Lendas. This song is done.
Bye, guys. Wait, screen share. Boom. All right, guys. Thank you for watching. See you all tomorrow.